Hi, good evening, everyone, and welcome to the 95th episode of Let's Talk About Market. So, if we see the Nifty index today, it had broadly inched higher, and the overall broader market was good. But there were accidents in IT stocks, and that is due to some company forming. I forgot the name, but they have prepared some AI related models, which can possibly disrupt the IT business. So that's why they were down. But overall, if you see, it was a decent market. So what do we expect next? I think that's what we'll talk about. So let me quickly share my screen. Please let me know once you all are able to see my screen properly. Okay. Okay. Thanks, Dinesh. Thanks, Akash. So yeah. Firstly, if we see the Nifty index, the good part is that it has been trading above the daily averages for second day in a row. And as I had mentioned earlier, that at least what it will try to do is complete the cycle, which means that there will be 2 3 days more of an up move consolidation or whatever you want to call it. So that would result into the RMI going back to the zero line, because see, why zero line is important is because when it is above the zero line, there will always be a risk of RMI coming back to the zero line. If of course it is on the upside, then, and if the RMI is below the zero line, then there will always be a risk that the RMI can go back to the zero line, which can mean that there can be some pullback and so on. Okay. So typically, if the trend is down, then normally the RMI will behave something like this: that it will go to the zero line, then come down, and it will mostly be around the zero lines. And if it is a bull market, then it will try to do something like this: that it will go above the zero line, then keep coming back and keep rising higher, and that way you will end up getting those moves. You can see over here, right? When the market was falling, so you would see RMI going back to zero, fall, going back to zero, and falling. So this is how typically the nature is. So at least since the daily average, since the Nifty was trading above the daily averages, the least that we would have expected is RMI going back to the zero line, and then taking forward from there. So see, there were a couple of important things that have happened yesterday. Wait, let me just show you. So there has been a massive short covering by FIs in yesterday's trading session. So see, why I want to specifically highlight this is because around this time also, when there was a trade deal that was going to get confirmed and so on, I think it was this point somewhere over here. I guess we did not see a follow up. There was minor covering, not that much, and after that we started to see. Sorry, let me take the FI's positioning. So yeah, it was, I think, somewhere over here that, or no, maybe over here, I think. So when the Nifty index was trying to break out, we did not see any material movement in the positioning of theirs. But yesterday, we have seen almost around 40,000 contracts being covered. Now we need to see this trend. Okay, if we end up seeing this trend, then it will be good. The only thing is that always look out for the extreme short term setups. For that you require, so for a short term top, you require call minus put in red. You want these two indicator in the overbought zone. Okay, that's where you can say that we are possibly heading into a zone where in the short term we can end up seeing a top. But so far, I think we are still 1 or 2 days away from that setup, because maybe, I don't know if today call minus put comes into red. Need to see. But average swing coming to this zone might take a day or two. And also, if you see the percentage of stocks with RMI buy, okay, which is also a very good short term indicator, That is also say somewhere around 70, leaving some room on the upside still, in the near term. So that's why, for the next couple of days at least, it should be okay. After that, we need to see, how the data points unfold. Okay. But broadly, the thing that I'll be looking out for is how the Nifty is behaving around the hourly averages. Okay. So breaking below the hourly averages and below this important support zone will be the first warning sign that will be there. And after that, we'll see how it goes. But I think as long as it is trading below this gap zone, which I mean, above this resistance zone, we should be okay, I'm guessing. But yeah, I mean, let's see how things unfold. But this is what I will consider it as an important support level in the near term. Uh, the other good part that is happening is that India VIX has been falling. So this is third day for in a row that India VIX has fallen. So that gives some sort of sanity in the near term. I think, yeah, we just need to see that India which doesn't start spiking again. I mean, if it does start spiking again, then there will be this risk of Nifty falling back again. So that is another thing that you need to watch out for. But I think it will be very, very important to monitor what the FI positioning is. Okay, which means that do they cover their short positions or no, because that is what is going to dictate the market movement. Also, if you see net index futures in the last 2 to 3 days, we have seen a very good short covering. So, from almost 8 lakh 87,000 contracts. So, this is including the calls and puts. That's how short they were. Like I told you, I mean, this was like an extreme. I mean, we have never ever seen such levels. It was off the chart. Just to give you a sense what they were doing yesterday. Wait, give me a minute. I don't know why does it keep happening for a minute or so. I'd raised this issue, but I think it is not happening often. Yeah, sorry. I'm not sure why this is happening. Anyways, we'll try to get it checked. But yes, I mean, see, over here, what we have tried to do is that, this day's change, we have tried to, keep it in green wherever they have formed bullish positions. Okay. For example, for put index, they have covered put the, okay, which means that, you can see that long put, they have covered more than the puts that were short. So overall there were the put buying which was there, they have covered that, and that's why we have kept it in green. So green means that they have found bullish position, simply put, and red means they are forming bearish position. So you can see that over here days change ka also we show 30 days ka change. So on the budget day, they had seen, I mean, they had done a massive call shorting. Okay, you can see over here they had done massive call shorting, but in the past 2 days they have been buying puts, and they have been covering, covering their put position as well. And even in the index future, we have seen a very significant covering yesterday. I mean, of course, this was due to the expiry change, but outside the expiry, this is an important thing to note. Uh, so now, what next, right? So what next? Then, ideally, like I had mentioned yesterday also, somewhere we are kind of in this larger range. okay, where this is kind of the base and this is kind of the resistance that we have. So we need to break on either side. Until then, we it is very possible, it is very much possible that it can hover between this zone and so on. I mean, these all things are very much possible. So you need to be a bit mindful of that. Okay, what we would want now next is that weekly closing above the averages, and we see the weekly RMI also bullish zone. I mean, if we end up seeing this setup, then we can say that probably this corrective phase is complete and the next leg of up move could be starting. But until then, there can be some sideways correction, consolidation that is possible. Okay, so you need to be mindful of that fact. And again, the same thing you will want in the other indices as well, where all of them have gone back to the zero line. Now, when do they turn around and starts trading above the averages? This is what will be keenly watched, okay, in the near term. So you can see all of them, either their RMIs have flattened out or they are now trying to rise higher. So let's see, I mean, how things unfold. One thing, I had spoken about this yesterday also, IT, somewhere around the 61% retracement level, it went above that and came back. Never a good sign. Something like this happened in FMCG also, if you all recall. So FMCG also, this was the range. It broke above that and then it fell, right? So can this be a threat? I don't know. I mean, breaking below this trend line will probably make it, very vulnerable in the near term. So need to be careful of IT. But again, if you'll remember, yesterday we were looking at the RRG charts as well, and over there, IT anyways was showing dip in momentum, if I recall correctly. So if you see IT was anyways, showing a declining trend in the short term, right? Even in the weekly chart, I think it was tilting on the upside, and actually it was not this big, but today's correction has led to a big sort of a U-turn case in Nifty IT. But anyways, I mean, this is why RRJ becomes very important to analyze, because that kind of tells you how the strength of the particular sector is. And you can see that auto still not seems to be stabilizing. And I'm a bit skeptical on auto. Oil and gas, it has again bounced back to this. I mean, to the bleeding zone. And yesterday also there was a turnaround. And today you can see IT, ONGC, and all did well, and that kept the market afloat on the upside, despite IT falling 5% or so. So that's the benefit. Now you can see that infra is also turning around a bit. So based on this, you can try to see where the short term opportunities could be. Okay, and of course, I mean, if you want to get into a bit more micro, go to daily, and you can see over here. Over here also, oil and gas is rising. Weekly also it is rising. So it's a good sign. Again, infra also, there was a turnaround on daily also it is rising. So again, a good sign. So this is how you can try to find which are the good and the weak sectors. Okay. That's how you can do it. And then of course you can look at the heat maps and see which are the ones that are outperforming and underperforming. And apart from that, you can probably, so one thing that I also found very helpful was that always try to see which are the gainers, losers, okay, or at least who are the volume buzzers, because over there some or the other thing keeps happening. Like say for example BLS internationals, if you see, I mean, this is just out of blue. I was checking and I saw that there could be this falling wedge pattern that could be forming. Now, why has it risen? I don't know whether this was result reaction or so on. But Lloyd Metal also, it was probably due to the result reaction. So Devyani also, it was result reaction. So somewhere while scanning you might end up finding something, some or the other thing interesting. Okay, so you can do that. In fact, if you want to see a broad market, then I would suggest you to look at Nifty total market. Okay, so that's how you can see over here that which are that who are the ones there, where the rise is very very sharp. I mean, the volume change is very sharp, and in fact they have been rising as well. Team lease and all. Sometimes what happens is that you might end up getting some bombed out stocks also, into this list. For example, I think Sheila Foams, it has been going down one way if you see the chart, but now from important support levels it is trying to turn around. Similarly, if you see team lease, something of this sort of thing is happening. So you might end up getting some interesting insights in the near term. So it is always good to have a look at these things. And yeah, broadly, I think that is it. See, what we need to do again is that, try to figure out which are the strong and the weak sectors right now. I think RRG will do great job for you in that. And then, wait for the Nifty index to break out. I mean, that's where I think the medium term opportunity will lie, which means that if it breaks out on the upside decisively, then that's where the opportunity is. And in the short term, this is the important support zone. So if that breaks, then again, possibility of a down move can open up. I think between that, the idea would be to keep your time horizon short, and maybe try to trade the hourly and the daily cycles. That's about it. And see how things unfold. So that is what I think we should be doing in the near term, because I mean, there is just too much noise at this point of time, which is I mean happening either through the globe or our own news flows and so on. And that is why it is prudent to keep your time horizon short in the near term and wait for this breakout to happen. Okay, and and by that time, either the breakout or breakdown occurs, you will get some hint of the data points or the sectors that are going to do well in the next leg. I think that's where then the opportunity would lie. But broadly, if you see, I mean, I have mentioned that PSUs, I mean, PSU Bank, frankly, I am a little skeptical over there. But I mean, so far it is into that outperforming zone. So it's okay. I mean, you all can keep that in radar. But PSU, you see, then you see metals. I mean, these are the ones that are actually outperforming well. Now I see that oil and gas is also trying to break out, from this consolidation. Infra also we saw some turnaround, but infra also, like Nifty, is just stuck over here, right? So we need a breakout. So we need to be a lot more bottom up this time. Try to find firstly, which sectors are doing good, and then try to find which stocks are doing good. Else, there will be some stocks, like we saw over here, I think Sheila Foam, then Avanti Feeds and all those guys, which you might not see it some in some of the index, but you can see it simply on the dashboard. So when I was seeing this, there were many interesting micro cap stocks. Like if you see Avanti Feeds, this seems more like a cup and handle kind of breakout along with the volumes. Now, of course, we need to see how the delivery volumes of Avanti Feed is, because I think even yesterday. So this, by the way, is a big beneficiary of US and India issues getting sorted. But you can see yesterday there were. Okay, so there was a significant amount of delivery taken. If you see 35%, which generally is its average as well. But in absolute terms, if you see, it has I mean, people took a delivery almost of around 22 lakhs, right? As against 1, 2, 3, 4 lakh average. So that way it helps you to understand how people are behaving into this. Okay, so yeah, I think that's how I would look at the markets at this point of time. maybe small micro caps is where they are bombed out and you can end up getting a little bigger moves. But in FNO stocks, maybe it is just prudent to see small moves at a time and expect just small moves in the near term and then take it from there. I mean, as the trend unfolds. So that's how I would think about it. Let's try and take up some questions now. In profit in profitable position, which is better, book half and remain trail it? I think it kind of depends. Option RMI, especially if it is an option, of course you have to be on top of it and you have to keep tightening your reversal levels, or maybe also book some half. I mean, when you do it in cash, I mean, it is a different ball game. But I would imagine that it is always prudent to book half and take the money out, and then at least your risk will be lower, and then maybe try to trail with the less. Trail with the rest of the position. So Milind Mehta, as I told you, I mean, you have to go, sector by sector, stock by stock. I mean, I can show you that there are bearish trades also that are there. I mean, just like, okay, so as a disclosure, we had put out this call, but you see something like this. So there are some stocks that are breaking out as well. There are some stocks that are breaking down as well, right? So over here, what you see is that fall, consolidation, and now again possibly a risk of one more leg of decline happening. So you have to be very very stock specific. I mean, things are happening. I mean, we are seeing divergent move within stocks and sectors as well. So it is not like a blanket buy blanket sell kind of this thing. So it depends what which in which direction are you more comfortable. But like I said, I mean, there are a lot of stocks which are weak and they are continue to weaken, right? I think Cummins India, we had talked about yesterday, and not yesterday, but prior that, it has taken a correct. I mean, it has seen a correction. Now it is pulling back. Uh, but over here also, if you end up seeing the structures and all are not that great, and on top of that, in the medium term, there are bigger divergence which are also there. Okay, so this was the divergence was which was making me a little nervous about Cummins India. And if you see, this fall has happened and the cycle has completed. Now whether it will go further up, I don't know. That is what we need to see. But again, like I told you, I mean, everything is kind of stock specific as well. So there is no blanket buy or blanket sell. Is how I would think about it. According to both swing indicators, 2 3 days ago, according to RMI zero cycle, it touched down, means after 2 to 3 days it can go up. Sorry, Akash, I did not understand, but I mean, all I can say is that if all the three indicators, that is percentage of stocks with RMI buy, then swing, average swing, if all comes to 80, you need to be a little careful. Okay. Wait, I think I got. According to both swing, average swing indicator, 2 3 days it goes up, and according to RMI cycle, it goes down. RMI touches zero line and down. Sorry, I still did not get your question. You might have to write it properly. Do we have data for FI short position in other market? Maybe that help us to understand. No, perpetual learner, we don't have it. You might have to see it individually. I think I have bookmarked this S&P 500 position for how, I mean, how people do it. But I think you might have to check it individually. I mean, we don't have a data at this point of time. And perpetual learner, see what we are discussing in the India charts, it's more from a short to medium to long term perspective. This is what we are talking from a very short term perspective. I've told this earlier, we should not be mixing both the two. When some levels are hit, the view also changes. So, don't mix the two, is what I would say. Please try to understand what are the objectives that we are trying to say, over there and over here. Suvarna, so gold, silver, please. I mean, I wouldn't like to comment over it. And anyways, it is so wild that I don't think you all should be putting your hand also into that, because in a day 10, 10, 15, 15% movement is happening. I mean, even if you take a mini, that is like a vast move that is happening. Just stay away with that, is what I would say. Akash, Nifty index swing 2 3 days upside. RMI says after completing. Yeah. So yeah, right. Okay, now I got your question. So RSI, I mean RMI going back to the zero line, that is like the minimum criteria that is there. Okay, if that happens, then we can say that okay, अभी जो भी up move या sideways consolidation होना था वो हो गया, is how we would think. And then additionally, if you see the RMI turning down and you see swing average swing also going to the towards the overbought zone and trying to come down a bit, then you have to be a little careful. It does not mean a blanket sell, but you just need to be cautious and see every time some indicators have some pattern. Okay, you need price action to confirm that pattern. Okay, so when such kind of patterns happen, which means swing average swing both comes to 80 zone, you have to be careful. It doesn't mean that you go ahead and you short next day. Okay, you need those confirmation of equity market, but at least if you're long, then you be careful. Okay, that is what indicates, and that is how we think about it. Okay, I hope that answers your question. Deepak says, can IT be forming ascending triangle? I don't know, Deepak. I mean, after yesterday's news and the way things have fallen off the cliff, I don't know. I mean, the point is that we should not be hoping. We need to be a little more. How do we say? Uh, we need to be waiting for the confirmation. Okay, not trying to anticipate something. So in case if you all have position, need to keep a proper stop loss, or something that doesn't make you feel uneasy. Okay, because irrespective of stop loss and so on, if there is something that makes you uncomfortable, that means either you have not kept your stop loss, or your position will be way too high than what you usually form. I mean, in either of those cases, it's always better to book out some or book out entirely, because when you are not in the right state of mind, you might not be taking right decision as well. So that is just one thing I can tell you, because I mean it has often happened with me that if I take outside position, uh, thinking that this will work and I'll make big money and so on. I mean, it usually backfires. So, but all I would say is that don't hope until we don't get a confirmation. Okay, we can think about certain patterns happening, but wait for the confirmation is what I would say. So I think I've tried to address all the questions that I got in the chat box. Any further questions, please let me know. Else we can wind up the session and maybe we can catch up tomorrow at 5 p.m. Any questions, please let me know. Else we can wind up the session for the day. Yeah, I think we should not be discussing out of context question perpetual. The idea is not to I mean, we are not here to talk about the trades, but it's more about how to use strike and make the best use of it. And we can all learn together. So that is, I think, how we would like to keep it. Deepak, okay, confirmation is the key. Yeah. 1200 points rarely happens. Why so huge gap up? 500 points considerable. So it could be also because of positioning, Akash. I mean, people are short. We all know that, right? I mean, the FIs are short to the neck right now, and somewhere, someone has to throw the towel. I think that is why it would be. But I think yesterday particularly there was a lot more reaction also because it was weekly expiry, and many would have got screwed. Because I mean, imagine if someone has sold call for 510 rupees and they are seeing suddenly 1,000 point gap up. I mean, they would have got badly screwed. So I think those 1,200-1,300 points initial move was also to create that panic. Uh, I think that's how I would think about it. Okay, so I think I've tried to I mean address all the queries. So yeah, let's catch up tomorrow at 5 p.m. and see how things work out. Okay.